At a certain scale, payments isn't a cost factor anymore. It becomes a strategic capability. That's a quote from Christin Burmeister, head of product at Otto Payments. For those of you outside of Germany, Otto is one of Europe's largest e-commerce marketplaces. With 7 billion euros in GMV, 12 million active customers, and more than 6,000 merchants. They started 70 years ago as a catalog company and successfully transformed into a digital marketplace. And they built their own 250-person regulated payments entity to run it. Before joining Otto, Christin spent 11 years at Zalando Payments, where she helped build the payments unit from the ground up. So when we talk about large retailers building in-house fintech units, she has done it twice. In this episode, we discuss why Otto decided to build its own payments company rather than use third-party providers. We cover how they balance seller risk management with growth enablement and their recent move into embedded lending with Banxware. Also, Christin shares honest advice on what it really takes to maintain a BaFin license and why it's not for everyone. My name is Lars Markol, and this is the Embedded Finance Review podcast. Every 2 weeks, I'm interviewing the builders and shapers of embedded finance. And a quick reminder from my side, at Embedded Finance Review, I publish weekly newsletters, bi-weekly podcasts, and host in-person and virtual industry events. You can find all of them on my website, embeddedfinancereview.com. In addition, I work with non-financial brands, infrastructure providers, and banks in understanding, designing, and launching the embedded finance products. If you're interested in working with me, visit my website and reach out. And now, let's dive in. Hi, Christin. Welcome to the podcast. How are you doing today, and in what part of the world are you located right now?
Hi, Lars. Thank you so much for having me. Highly appreciated. I'm in Hamburg today. It's my office day, usually Wednesday and Thursdays. I'm very fine. The sun is shining. It's bitter cold, but yeah, that is typical for January. So a very good day. Thanks you.
That's true. That's true. I mean, it's like it was the 21st of January recording this. I just got back from India last week, so really adjusting to the temperature, to the weather. But yeah, that's the usual January here in Germany. And obviously, as a person living in Germany or growing up in Germany, Otto is a very well-known brand. I think many of the listeners who are from Germany will immediately know what the company does. People from outside of Germany, maybe not so much. Maybe before we dive into the whole embedded payments and payments angle and talk about all of that, maybe you can get us up to speed and explain what Otto exactly does and how you would describe its positioning within the German ecosystem.
Yeah, for sure. I'm with Otto for 1.5 years now, so bear with me. I'm not the Otto person that knows actually every detail. But what I find very interesting actually is that if you take a look at Otto, it is one of those only catalog pioneers in Germany that successfully transformed into an e-commerce marketplace. And they started roughly over 70 years ago as a mail order business, pretty much. I can remember how my grandma ordered, took the phone and called customer service and told them on which page, which shirt and trousers she wanted to order. And since then, Otto actually continuously reinvented themselves. Nowadays, they operate as a large marketplace with roughly 12 million active customers and also more than 6,000 sellers nowadays. And I argue its positioning is pretty deliberate. It is a curated, it is a trusted marketplace. They are very much focused on quality, responsibility, and for sure long-term customer relationships with shoppers and customers on the one hand, but also the sellers, the merchants on the other side. And rather that than being the biggest at any cost.
Mm-hmm. And actually, I do remember from my own childhood, actually, also these super thick catalogs from back in the days.
Absolutely.
And my parents, me, my brother, it was also quite common to try to avoid the trip into the city to buy a couple of things, but rather try to find something in this catalog, get it delivered home. Nowadays, we all do this for e-commerce, but indeed, it all started for many of us with these catalogs. Interesting. And obviously understood that, or like they understand now for everybody, the core offering, but obviously here on the Embedded Finance Review podcast, we're talking about payments, we're talking about embedded payments. And the other interesting fact about Otto is obviously that Otto has an own payments unit. You are head of product there for payments at Otto Payments. The subsidiary was founded in 2020 and received the license from BaFin in 2022. You mentioned already you've been part of the company for a year and a half, so you've obviously been not at that point point of time when the decision was made, but I guess maybe you remember or heard the stories from colleagues, like what was the original intention? Why did Otto do this step of building Otto Payments in-house?
Yeah, absolutely. There are a lot of similarities between Zalando Payments, where I've worked before for 11 years, and where I actually was able to run through the whole process of getting a BaFin license and getting founded as its own entity. So there are parallels. And the biggest one is for sure that at a certain scale, the area of payments stops being a cost factor, right? It rather becomes a strategic capability. And Otto has always been very close to their customers. They realize that actually critical parts of the after-sales process, of the customer experience after the order, think of invoice payments, installments. They highly influence the customer convenience. And these process steps, they are deeply linked to trust, to risk management, to a lot of data, customer data. Hence, building Otto Payments, same as for Zalando back then, it actually internally gave Otto more control over the customer journey. They could iterate pretty much on their own speed. They had the ability to design a payment product that is specifically for the marketplace rather than adapting generic third-party solutions that were out there. And there's always that one hands-on example, and it is pretty much the dunning process. It is not a process that people want to result in. And as a company, really deciding on our own how the tone of voice, how the frequency of reminders should actually be designed to be successful for us as a company, but also to meet the customers that we actually have. And that is one of those typical process steps where you say, I want to own the process. And that helped a lot for sure. The BaFin license is a very specific topic. I would argue it was less about regulations, but more about long-term independence. You can find various models in the market on how to solve it on marketplaces. But for Otto, for sure, Otto Payments is the exclusive payment service provider. And being licensed as a own entity and not the whole company, not the whole group, fulfilling all the regulatory requirements and supporting pretty much the payments processes, not only towards one seller, Otto, but to thousands of sellers, was given by the fact that they build up Otto Payments.
Understood. And obviously, there might be many listeners out there who are the payment nerds and will maybe immediately understand by explanation you did for why Otto and maybe also Zalando did the move of like starting own payment units. But maybe for those people who work in fintech but are not so deep into the payment stack, then maybe you can explain a little bit. Like, I mean, obviously both companies, Otto and Zalando, have operated before. They've done payments before. So what did really change? And I mean, you mentioned a few things with different payment methods and the flexibility and so on, but maybe you can give a little bit more detail around that, what really changed for the employees inside, but also maybe customers outside.
Yeah, absolutely. So on the one hand, as I said, it was not just a payment unit within one e-commerce shop, Otto, right, with one seller. Hence, the money flow from customers to the entity to all those sellers, they must fulfill regulatory requirements. And handling money is always a delicate process. And that is something where it is good to find one solution. And in our setup, it is actually the factoring solution, being able to buy the receivables from all the sellers towards their customers, and being able to handle all the after-sale processes in the payments process step helped us a lot, because think of the customer. The customer puts a lot of articles, goods in their basket, and those goods come from totally different sellers. We don't want to be in a situation where we need to think of, okay, does one seller want to offer a buy now, pay later option, the other one not? We want to own that and have a absolute frictionless and the most convenient way of checking out for the end customer. Hence, that factoring model worked for us very well. That is one thing that changed because there's no factoring and also no licensed process if you just do it for your own seller and for your own company. But handling it for thousands of sellers was something totally different. When I think of what changed for Otto Payments and the staff, the colleagues, Otto Payments operates pretty much as a dedicated fintech within the group, but it is very clear there's one customer, and that is Otto. In practice, that means that we have a very tight alignment. Whether you think of product and tech, risk and operations, we all work towards successful customer and seller journeys, right? And we do that in collaboration with the respective teams on Otto's side. One advantage is that we have focus. We optimize for one big ecosystem. The challenge is, of course, discipline. Being internal doesn't mean that we can move slower or that we accept lower standards. We wanted to benchmark and also did that ourselves constantly against external payment service providers. And that actually also makes Otto Payments a very successful entity. We have colleagues from the payments industry that are not only then product experts, but also payments experts. And that helps for sure in the discussions if you think of product designs that you need to prepare, always having regulatory requirements in the back of your mind.
And can you tell us how big is the unit Otto Payments, in terms of employees, and how is it being structured? And just to confirm, every single payment that goes through Otto is done basically or is handled basically by this team, correct?
Correct. We are roughly 250 employees in a regulated institute. It is pretty common that you have the market side, the front office. They are the ones who want to solve the problems for the customers, whether it is B2C, the shopper, or B2B, the seller. And it is all about problem solving. It is about making revenue. But then you also have the controlling side. It is the back office pretty much. You have the compliance team, internal audit, you have finance, you have operations. They are the ones who also make sure that we as product and tech, we move within a range that is acceptable pretty much and that fulfills all those requirements from regulatory perspective. And this is how we are structured. Within the product area, we said it makes a lot of sense to divide by B2B and B2C, and customers' needs are for sure different than sellers' needs. Our product teams are organized in product squads, so the tech and product and people work together on strategic products and really have a long-term vision for their products. And on the other side, I have to say we have a very strong connect to the back office. Think of operations, for example. In the B2B area, it's not all about scaling up like crazy. There's a difference whether I offer a service to millions of customers or to 6,000 sellers, right? So it is more about deep relationships and also qualitative and customized answers to sellers' needs. Hence, the collaboration with operations, for example, is even closer because the service that I offer, for example, in the onboarding process or in the payout process, it is not fully and 100% automated. There are always process steps where we need operational impact and people, and that makes the service a 100% correct service. And hence, I argue that our front office and back office teams work very closely together to make sure that especially the B2B journey, the seller journey, is as optimal as possible.
Understood. And you did explain that Otto Payments' only customer is basically the marketplace. So trying to understand how this works in a little bit more detail, maybe in a practical example, let's say there's a new payment method coming up. Is that typically driven by like Otto Payments, who come to the marketplace and say like, here's a hot new payment method. We hear in the industry, our payment colleagues keep hearing it in different news articles. Is that something you would try, or is it rather the marketplace who realizes from customer demands and brings this to the Otto Payments unit?
Yeah, I think you have both situations. For sure, when it's about trends in the payments industry, then it rather comes out of the payments entity and the product teams over there. But on the other side, if you think of the customer journey on site, if you want to order something, you want to have a frictionless journey. Hence, the whole journey on how you move from a product detail page into your basket, into deciding that you want to check out now, and offering the payment methods in a structured way, in a convenient way that it is understandable, then that is pretty much owned by the Otto team, by the shop team, and they work very close together. If you think of planning iterations, if you think of planning product changes, it always needs both sides. So the whole portfolio management in that sense happens across the units and across the team boundaries. And that makes it actually even more successful. Another very good example is if you think of loyalty programs, right? Loyalty program is for sure owned by Otto. And you can think of, okay, how can I make my loyalty program even more attractive? They have lots of ideas and they know how loyalty programs work. And on the other side, we as payments have ideas on what kind of payment features could we actually optimize in the terms of a loyal customer that may even pay for an abo fee and wants to have an extra asset on set. So what can be a payments asset on set? And this is where both sides pretty much come together and make the product design together for the smooth integration into both sides.
Interesting. And in terms of payment methods, I guess your core market is Germany. Is the payments being used on Otto pretty similar to what we're seeing in the German market, or is there a specific difference?
Yeah, no, it is very similar to the German e-commerce market. I think the significant differentiation is what kind of goods is an e-commerce player selling, right? And invoice and installments, they are deeply embedded in the German e-commerce culture. We know that, and Otto knows that for I don't know how many decades. And we all know that these payments offer actually less friction, especially in the checkout step. You can decide whether a customer is safe enough and solvent enough to get such a payment method offered. And then it is one click and everything else happens afterwards. And finalizing the order is as fast as possible. I also argue that customers feel more confident ordering, especially high value items. And yes, that can lead to higher order volumes. It also leads to more returns. That is what the industry sees as well. But when managed well, the net effect is for sure a higher lifetime value and also trust from a customer side towards us that we actually allow them to pay later and buy now.
I guess it also comes back, or at least to my experience with Otto back in the days when my parents ordered from the catalog. It was always the goods were delivered together with the invoice, and then you decide what you keep and what you pay for. And I guess that's what we also now find very convenient in e-commerce, but obviously it was already the case many decades ago.
Correct. And the returns are, for example, always a discussion point, right? And it is a matter of fact, returns do increase. But we also see that they increase predictably. And that predictability is actually key for us to manage the risk. And being good in that one, I mean, that is a success factor. And that is what Otto is known for years and where they have a lot of customer history and a lot of knowledge that they gained. So that helps for sure.
Interesting. And Obviously, when talking about payments and the fintech unit within Otto, one big topic is also fraud. Very important for anybody who does payments, but I guess specifically relevant for handling a marketplace. You did mention already the number of 6,000 sellers and that you tend to have a very loyal base and interaction. Nevertheless, I guess fraud is also an issue on either side. Maybe you can go a little bit in detail how Otto handles this.
Yeah, absolutely. I argue every payments entity or shop that offers invoices, buy now, pay later options in many kinds, they all need to be very good at assessing the payment default risk for customers, right? And that is what players have really focused on over the last years. But for me, that question is pretty nice because it is also about assessing the merchant risk, hence the payment default of sellers. And it is a nice question because that is actually the reason why I started at Otto Payments in the first place. I had that mandate of managing that risk. We saw that we were not that prepared, I would argue. And that is why we needed to have a good concept and good automated processes. Nowadays, we combine, on the one hand, the sophisticated and highly automated onboarding checks. They are critical to just start on the marketplace. And additionally, we added an automated weekly risk evaluation. Hence, there is a risk evaluation based on continuous monitoring of performance data in the areas of payments, but also performance data on the marketplace in the area of customer service, of logistics. You can pretty much identify behavioral patterns, and then we put our merchants in one of our risk categories. And based on that criticality of the risk evaluation, we can actually take actions. A very low-key action is a recommendation for action towards the seller, right? Really giving them the hint that they are at a critical point in answering, for example, customer tickets on point. But then there are also more stronger sanctions, for example, payout pauses, because if we know that we pay out the sales towards the partners is the terminology that we use for our sellers, it happens on a weekly basis, then we also know that at a certain point in time, we need to have a little bit more time for closer observation because there are indications that a merchant could have problem. What is the problem for us? It is actually that sales decrease, but returns continue to come in. And in that moment, a merchant can go into a negative processing. And our goal is not to achieve zero risk. That is for sure. That is unrealistic. But we want to detect those indications fast. And we want to have proportional controls before the payouts happen. And that is why pretty much on every Wednesday, we are very clear of, is there a certain merchant that is a higher risk for us? And what do we need to do? I argue we are very seller-centric. Hence, we rather want to steer the risk. For us, it is so much more important to enable the growth of the good ones, of the ones that are hidden champions that could grow even more as what we have seen in the last month or years, than sanctioning the insolvent and fraudulent merchants. We have to do that. It is clear, but it is such a very, very tiny part of it. And one of my teams actually has that ownership of balancing that act between taking a risk at a certain point in time and paying out while sanctioning then other merchants because they are too risky at a certain point in time.
Understood. And since we're not talking about the merchants and you're also referring to the weekly payouts, quite curious to understand, like when obviously the sellers are a very important stakeholder in the Otto marketplace, is there any other like financial features, services you offer to them to basically make their life easier besides the weekly payouts?
Yeah. I think what we have so far, it is really focusing on payments. Payments are the foundation. But for us, for sure, as product persons, that is not the end goal. Once you are able to manage money flow, additional financial services become for sure a natural extension. those extensions should always be driven by marketplace needs. It shouldn't be my pure product manager ambition. But we've seen through seller interviews, through statistics, interviews, surveys, that one of the main drivers for growth is managing liquidity, having cash flow, having more cash or faster cash. And that is why my team and I, we have a strong belief that if we push cash flow at the right point in time, it helps merchants to exploit their actual growth potential. We do that in different areas. The most important ones for us right now are fostering their growth with a collaboration with Banxware as a lending provider, German-based company, and pretty much established with many marketplaces in Germany. And that is one collaboration that helps for sure to give an extra boost of cash flow if a seller is in need of investing because they actually see a chance to grow at a certain point in time. Think of Cyber Week, where everyone knows if I just invest in building or buying a few more goods, it can actually boost my sales significantly. On the other side, we also think of faster payout features, and that is something that we want to do internally, and we also have the capabilities for that. Again, it is a balancing act between risk management and growth enablement, but I have also seen that we have proven ourselves for years now and proven ourselves in being very good at targeting the right set of customers. I want to push them not into the most complex payments or financial products that they don't need, right? It is really knowing what kind of type, what kind of category of goods merchants sell and at which point in time a boost in cash flow helps them. And that is pretty much our most important ambition right now in the next year.
When you explained the liquidity feature or the financing product you do together with Banxware towards merchants, I mean, when somebody describes this, I always have to think back about this one interview. I mean, I checked it. It's not available anymore online, but it was with the former CPO of Shopify, where they explained the move into their Shopify Capital product. And they were basically saying like, we really didn't want to do it. Like we really didn't, at that point of time, really didn't want to enter financial services and offer financing. But they were like every single merchant we spoke with that we wanted to grow said the same thing. Liquidity is a problem. We are not growing. So even though they at that point of time, because of their resources and focus, they didn't want to do it. They figured that's the one thing we can do to help our merchants grow.
Correct. And I mean, it is great that there are lending providers out there who really are specialized in that field. So you can start with very low integration efforts. You can have marketing collaborations pretty much, and you can really find out and experiment how big the need is, and also find out together as soon as it's a collaboration, right? And it is also a strategic collaboration in that moment. We find out together what is the right portfolio of merchants who are actually good loan takers pretty much. Because as I said, it is not about pushing almost insolvent sellers into more problems. I think that is nothing that doesn't help Banxware as a lending provider, neither us. And finding that good balance is always the challenging part, but it is also the most interesting part, because the better your sellers, it's the same as on the customer side, the better the decision is at the end.
Yeah, I do remember I spoke also to some people in the e-commerce field, and they were also describing to me that very often, especially also when you have new brands, new sellers that are growing, and obviously a marketplace like Otto or other providers have these kind of like insights and performance and can compare it as well to or to other sellers who have been on a similar journey that know exactly, okay, if this merchant is able to cross maybe this tipping point and is able to come over that, then we're talking about complete different volume this merchant can do. And maybe this merchant needs a little bit of push to maybe achieve it at all, or maybe in some cases just do it faster so that the volume goes faster on the platform.
Correct. And this is the moment then where you actually, the synergies between the marketplace and us, the payment service provider for the marketplace, they really pay off, right? Because the strong relationship, the key account managers, they own the marketplace side. They own pretty much their customers, the sellers. And for us, it is the big goal to enable the marketplace to grow, and doing that with payments and financial services. And this is what drives my product team the most.
Of course. And not sure how much you can share, but the partnership with Banxware, is that something you just recently started? Haven't read so much about that yet, so quite curious to hear what stage that is in.
Yes, absolutely. We started it was September, October. So it is pretty new in 2025, correct? Even when you do a very lean integration, such a collaboration, marketing collaboration, as I said, we are a regulated institute, right? So we always need to think of what are we allowed to do. We can give a hint to our sellers that we have a lending provider that we collaborate with, but we cannot recommend. There's a very fine line between giving hints and recommending something. And you need an extra license for that recommendation towards loan providers. So you have to be a little bit careful when it comes to the communication channels. But we've established the communication channels. We realized already in the first month how the communication channels differ in successful applications. We've seen that a newsletter, for example, doesn't lead to such a strong adoption as, for example, a teaser in our user interface for the sellers. They come into the user interface to the payments section because they need a bank account statement or they want to see how their sales develop. That is the moment where they are already interested in payments, right? In their cash flow, in what can I expect to come in? And that is the moment where a teaser and a hint towards Banxware was for sure the most successful one. That is what we can see already. And we can see that there are partner sellers already that applied for loans and also received loans. We can also see how they develop on our side. And for now, there is a certain risk for sure, but the risk is absolutely manageable. And we can see that it helps in that situation. Whether it is sustainable is nothing that we can see right now, right? The growth of the partner and the seller, him herself, is something that we need to check and observe over time.
Understood. And I guess the implementation of the funding node within the dashboard versus a newsletter is probably another good example of telling the customer about it at the right point of time, not when
Correct.
he or she checks the email and just maybe is doing something completely differently, but maybe is rather thinking ordering some more products to sell more and all these kind of things.
Correct.
Christine, you mentioned at the beginning already that obviously you have a background with Zalando Payments, now working for quite some time now with Otto Payments. Do you see this also other companies? I mean, obviously marketplaces, similar kind of companies building their own in-house fintech units. Do you think it's becoming more common now, or is it really only possible if the company has a certain scale? So maybe looking at the German market, there's not so much more potential for other companies following suit.
Yeah, I tried to observe that a lot, actually, because we have several marketplaces, right? You can also take a look at Kaufland. You can take a look at About You, that now also merged with Zalando. I argue that Zalando and Otto both operate at a very high level, right? They are pretty huge, and they've also had, I argue, leads who really saw a strategic benefit within payments. But I think that doesn't need to be the situation for every marketplace. It depends again on how important or what kind of payment mix and payment methods are important for the customers. And if your marketplace works with standard payment methods, with low-risk payment methods as well, as for example, PayPal, credit card, direct debit, where you see the money comes in before you actually hand out the goods. I think it is that matters actually. And I would also argue that it is not for everyone. So I want to say that scaling alone isn't enough, that if you want to go the path and have your own payment entity that also needs to be licensed in whatever kind of way, depending on your business model, you really need to be clear why you are doing it. What kind of products do you have now that really require a regulated institute? Or what is your ambition level for the future? And a fintech needs to be treated like a real company. You have a very strong governance, you need top talent, and you need to take a regulatory very serious. I've seen how Zalando and also Otto have grown iteratively. They started with 1 or 2 products that truly matter to the core business. And whether it was Zalando or Otto, for both, the whole topic buy now, pay later was very important for the customer stickiness and customer loyalty. And I see the point why, and that is why it made a lot of sense. And if you then have people in-house who have quite some expertise in the payments area, I think it can make a lot of sense. But we all know within Zalando and also Otto that there is quite some effort not only in getting a license, but also in maintaining that license. And you also have a certain impact on your agility and pace pretty much in the product development, because our product managers need to keep regulatory requirements in their mind for pretty much every feature that they do. They need to decide, is that a new product? Is that a new feature? Is that something that is more that I actually handed in when I ask for my license? So all those questions, you need to be up for that. You need to be willing to invest into that with good experts out of the payments and also out of the regulatory environment.
Understood. Christine, my final question was actually around some kind of advice for other companies, but I think you very well shared some nuggets there, what people maybe in marketplaces, maybe in retail should look out for, and what the considerations are for maybe starting this in-house as their own fintech or payment unit or not. So at this point, thank you for sharing all the insights. I learned quite a bit. Theoretically, quite coincidentally, I do have to order a new washing machine and dryer tonight. So I will maybe see the Otto payments flow tonight from a practical example, and will remind myself what you shared along that journey. If there's anybody out there who still feels like I have a question for Christine, is there any way to get in touch with you? Most people answer this question with a LinkedIn profile. Is that also the best way to get in touch with you?
Absolutely. LinkedIn is the best touch point for sure.
Perfect. Then I'll link that in the show notes as well. And again, thank you from my side, and until next time.
Yes, thank you so much. Have a great day. Bye-bye.
You too. Bye-bye. Thank you for listening to this episode. If you enjoyed the insights, please give it a 5-star rating in your favorite podcasting app and feel free to share it with your friends and coworkers. Until next time.